Ready to go. All right, access to this webinar is educational informational purposes only. Consult a licensed broker, registered investment advisor before placing any trades, all securities, and orders discussed to attract and monitor in virtual trading accounts. Virtual account prices and returns may differ from actual trading results. Commission costs are excluded. Need to fill StockWorld.com, PSW, and its affiliates, or any of their respective offices, personnel, representative agents, or independent contractors are in such capacities, licensed financial advisors, registered investment advisors, registered dealers. Nothing in the webinar website or promotional material constitutes promotion, recommendation, solicitation, or offer of any particular investment security or transaction. Trading options involve risk. Visit the OCC website, www.optionsclearing.com, to read the characteristics of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options. We are not a service that tells you what to trade. We are not implying guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results. And results discussed in this webinar are not suitable and are only valid on that specific or identified date. Your results may vary by access in this webinar. You agree to hold the above harmless from any losses you may incur as a result of the information discussed in the media identified above. By accessing the webinar, you agree to be placed on a mailing list to receive our newsletter. Rest assured, we take your privacy very seriously, and we will not distribute or sell your information to anyone. Which isn't fair, because Facebook does that all the time. That's how they make their money. Anyway, how's it going, kids? All right, let's see how the market's doing. Now, interestingly, the headline Dow, the Dow on the TV is up. The actual Dow index is up 88 points, and the futures Dow is only up 40 points. So we have a very muted response for the for the futures, which means like these are the let's see. These futures, these are the June futures. They have 44 days to go. So, when you see the futures not responding the way that today's market is, that's partly because it's not really a fundamental driver that people believe is going to last moving the market today. All right, sometimes they're slow to respond, sometimes they're not. But you got to be careful when you see that kind of thing. Meanwhile, things are perking up because the White House said that they're like, oh no, China's coming over here to do a deal tomorrow. We're in great shape. So despite what Trump says, look, to some extent they're saying that the president threatens China. I don't know. To me, when you're in a trade negotiation with somebody, or any kind of negotiation with somebody, and then you're on break, and you're reconvening the next day, the next week, whatever, and then you put out in the newspaper for everybody to read that they are dealing in bad faith and you're going to fine them or punish them if they don't come back to the table with a better deal, and if they don't do this and that and blah, blah, blah. I don't know how many people really respond well to that sort of thing. It's a typical Trump negotiating tactic, and even China has said, well, we know this is how he does business. I don't know how willing they really are going to be to excuse it, though. It's a typical thing because it works in New York, or in most places Trump does business, because he's a very large real estate firm, and you don't have much choice. It's his way or the highway when he's doing a deal. Don't forget there's thousands of contractors, and there's only 10 large buildings being built that year in the city. So you're either going to get the deal with Trump or you're out, and you're not going to have a deal this year. You're not going to be working on a building this year. So he gets to push everybody around. There are some people who won't work with him. In New York, there's tons of people who absolutely won't touch a Trump project. He doesn't pay half his contractors. He doesn't pay them. But if you do want to work with him, you have to put up with all this bullshit. He's used to it. He's used to doing whatever he wants, saying whatever he wants, and never getting in trouble for it. All that could happen is the contractor leaves and then another contractor shows up the next day. This isn't like that. China expects to be treated like an equal and be shown respect. And I think, I don't know, I think he's blowing it up on purpose. So I really think, I think this isn't about China. It's not about trade. It's not about fairness. It's about Trump running up the largest deficit ever by a US president, and he's trying to offset it with the money he's going to collect, another $50 billion that'll be collected from tariffs. It'll be 100+ billion, 100 something billion dollars he's going to collect off these tariffs. And obviously he's not collecting it from China, he's collecting it from the people who buy stuff. And that's why China doesn't really care. China cares that their trade is certainly being impacted. We imported 12% less, but think about that from China's terms. China exports to the whole world. And yes, we're a large trading partner for China, but we only imported 12% less goods than we did last year with the tariffs that are in place now. And China is actively out there getting other trading partners with their Belt and Road initiative. So to the extent that that's being successful for them, they may be thinking more and more they don't need us and they don't need to put up with this bullshit. And there's an entire planet out there that would consider it great if China stood up to us and told Trump to drop dead and walked away from the trade negotiations. They would be cheering China as a hero. They would be looking to China as a world leader, since the US has decided to step down from that role. So I don't think it's a smart thing to assume that this trade deal is going to go through, and we'll know in a couple of days, so it's not a big deal. But you know, I think, given the information I have at the moment, I think that China's best move is to tell Trump to drop dead. And I don't think anybody in the White House understands that. I don't think they understand that just because the Chinese team is flying to the US doesn't mean they're capitulating. It means that they're culturally not going to pick up the phone and say, we're not coming. Also, that makes them look bad. You know, but they're the kind of people, they're going to show up in person and say, you know what, we're not happy with this trade deal. We're not going to move forward. That's something they would do in person, not phone it in from China. And so they send their trade reps to have this conversation. And they're probably going to lay out what they expect for concessions if we want the deal to go through. And it's Trump that's desperately needing the concessions, not us. Not us, not China. Xi is president for life. I mean, yeah, the economy, if his economy totally tanks, then he's got a problem. But that's the thing. And again, this is a problem because we are no longer informed of what's going on in the world. But this is what the Hang Seng looks like right now. So the Hang Seng's up from 24,000 to 30,000. That's 6,000. That's 25%. And they pull back now to 30,000. Well, they pull back to 29.3, barely a pullback. So they're up more than the S&P is up. They're not hurting at all. They're back to their all-time, they're back to their highs over here. I don't think it's their all-time highs. I think they were higher back in the day. But they're back to their highs. And they don't necessarily want their market to go out of control. They're happy with where they are right now. They don't need a trade deal to get there. These are the guys being sanctioned that we think we're winning this war against. We're not winning crap. So that's a Hang Seng. Then we'll look at the Shanghai DJ, because that's the Hong Kong index. DJSH. That's the Shanghai Composite. That's the mainland index. But look at the mainland index. That's from 350 to 470. That's even bigger. Now drop back to 418, but even 350 to 418 is, I don't know, can't do math. 50 to 418. So that's 68 divided by 350, 20%. So they're up 20%. All right, and just to make sure we know what we're talking about with the S&P, SPX. All right. We're up. Well, where's November? We're up from our lows, same place, same lows. So we're up from 24 to 28. So 500 divided by 2,400, 20%. So we're up 21%. So we're all up about the same. And we're all up just around our previous highs. So there's no winning here. We're not beating China. They're not in terrible shape. They're not begging for mercy. And the factor, the one that matters, is that Trump has to be reelected in 24 months, not even 20 months. Xi has no election. He's not, and none of the officials in China have to be elected or re-elected or whatever. They're there, they're appointed, they're done. Unless something screws up, they're going to stay there for 20 years. So this is far from over, and I wouldn't get too excited about what's going on today. I think I have to wait for facts, because we don't know what's going to happen. It's very hard to call. Now, bringing us back to here. All right, so first of all, we made a few picks. So far, the indexes are, like I said, the futures are saying not so fast. Red, flat, barely up. The futures are indicating that the bullshit you're seeing right here intraday is a rumor-driven thing that nobody's really putting a lot of money into. Oil came up a bit. The report on inventories was good. Gasoline's up, but since everything's kind of weak, we have that long bet on gasoline. I hate to take it off because I think it's going to go much higher, but it's up like 600, 700 bucks. So I think I better kill it here. So let's sell that. Wow, look how fast that dropped the second I put a bid in. That's not nice. So this is when we started back at 191-ish, basically was the average here. Ow, come on. There, okay, got rid of that. So 700 bucks is all right. We already cashed out natural gas. That was 1,800 bucks on 3 contracts, so $600 a contract on the natural gas play from yesterday. That was from yesterday when we decided it was like stupidly low down here. And look, when it goes from stupidly low to stupidly high, get out. And again, in the grand scheme of things, of course I think it can do better. Of course I think natural gas can do better. But it's a lot of money to make in a day. I mean, here's, that's 2,500 bucks right here. Now, coffee is my longer term contract. That's all the way out to December. And I've only got one, and it's not doing very well. It's actually down 500 from the open. So I'm more likely to buy another coffee than do anything else. So if coffee goes back, now that I've gotten rid of these at a nice profit, I'll probably look to double down on coffee if it comes down again. If it doesn't come down again, I'll make my money back very quickly. And that'll be a good trade. And and for all of them, I think they're going to do a lot better. Let's take a look. Futures. These guys? No. These guys. Okay. So, here's gasoline. And I think gasoline is going to go back to 205 by June, July. But we have the UGA bet now in the short-term portfolio. I don't need this bet. I have a nice bet on the on coffee going up. I'm not sorry, coffee, on gasoline. We have a coffee bet too. I have a bet on coffee going up, so I don't really need to worry about the future. So I'm not, when you make quick money, you take it off the table and we'll get it on the next cross. If it crosses over 2, I'll play it again. And I'll play it with 2 as a stop. But right now, I just made really good money, so why should I leave it running, basically? And also, like I said, because the market is weaker than it looks, because things are not as good as they seem, because I still think the China thing's going to blow up. So maybe we'll get down to 180. Maybe we'll get down to 160. Then I'll be very enthusiastic to stick with it. Now, natural gas is down here. Same thing for natural gas. In the grand scheme of things, this is nothing. But we have our UNG play for the longer term, and also I'll get back in this one too. But we had a nice pop, made nice money for a day. That's it. Because if you're not going to take a winner off the table, what the hell are you doing? You're only going to take your losers off the table? That's not a good strategy, right? And that's the strategy you see killing a lot of people who play roulette, blackjack, or whatever, right? They let it ride. They make money, they let it ride. They make money, they let it ride. They make money, they let it ride. They lose and go, oh, well, it was only my original $25 bet. That's their logic. So they go 25, 50, 100, 200, then they lose 200, and then they say, oh, well, I only lost 200. You know why? Because they don't feel like the money they win is enough. And I see that all the time because people gamble for the wrong reasons. They gamble thinking they're going to get I'm going to win a car. I'm going to win a this. I'm going to win a that. I gamble for dinner. When I'm in Vegas, I gamble. Here's my logic when I go to the table. If I sit down at a table, usually I play poker, which is different. I don't call that gambling. It's my job. When I go to Vegas, my job is to play poker. I play poker for 4 hours. I win $500, $1,000. That's how I take my trip. That's my job when I'm in Vegas. Gambling is when I'm at a craps table or something like that. And if I play craps or I play blackjack, I'm playing. Usually, I'll sit down. I'll put $100 on the table, and I'll be like, okay, if I double up my $100, I'll go get myself a really nice Kobe steak or something like that, or some really good sushi. If I lose, I'll go to that crate place down the street for $20. So I'm not really gambling because I was basically probably gonna spend $100 on dinner anyway. So I take the 100 I would spend on dinner, and if I double it, I'll get myself a nice dinner. If I lose, I'll get myself a $20 dinner somewhere else. So that's my logic when I'm gambling in Vegas. I gamble for the bonus money. And any kind of gambling you do in futures is gambling. You should be gambling for the bonus money. You're not gambling for your house. You're not gambling for your future. But you know what? If you build up that discipline to gamble for the bonus money, and I know probably a lot of you guys are saying 2,500 is more than bonus money, but it's proportional. So when I win $2,500 in a day, and I lost 500, but I won 25, so I put that in my pocket. This one I think is going to come back over time. So hopefully a few days from now, this one will be my $2,000 winner. But the bottom line is I won 25. And by the way, another reason I'm taking off the table, I have a loser here. If I take 25 off the table, this one doesn't matter anymore. Now I'm still at 2,000 for the day net. But I won my money for the day. Any day I win $1,000, I want to cash it in. My goal is to win $1,000 every day. I don't, because some days I don't play or whatever, but as long as it's more like the days I play, I try to win $1,000. And if I win $1,000 on the days I play, because I don't play every day, if the setup's not good, I don't play. Then I'll make, let's say I play half the days, I'll make an extra $100,000 a year doing that. That's nice money. But that's because I'm happy to take 1,000 at a time off the table. I'm willing to take a couple of hundred here, a couple of hundred there, because it adds up. If you're always looking for more, you're more likely to get burned. You've got to have a realistic expectation. That's a lot of money to make in a day. And I don't care if it goes higher. I'm not going to sit there and go, oh, I should have left it on the table. No, I won. I'm done. I'm moving on. You got to have that discipline if you're going to play these things. And the same thing goes for options. If you don't take your profits off the table, when are you ever going to take them off the table? There's a certain amount of money you make, you got to say, geez, that's good, that's happy. In fact, good segue, frankly, that's why our portfolios they're not doing well because we weren't that hedged. We know we weren't that hedged. Where is it? Okay, here we go. Portfolios. You know, I talked about this in the last review. Where is the last review? Okay. So in the last review, I said, look, I said these things are, I want to go to cash. I'm worried about missing out on the gains, but we can't adequately protect. You can't protect portfolios that are up. I don't know how much this is up. How much is it? I mean, like, it's up 600%. You can't protect that. Not realistically. Yeah, I can protect it by taking $100,000 and betting the market short to cover it. But what's the point? I can also protect it by going to cash. Same thing goes to the long-term portfolio. I'm going to spend $200,000 to protect it. That's crazy. So in the end, the protection is all the silly gains that we just made. And we hope that they don't drop too quickly. So here we are on the long-term portfolio. In fact, it's down to 171%. It was, that's the short term. Nope. a lot of parts. Here we go. It was 185%. So we're down 14% in the long-term portfolio. But look at our cash position. We had 266 in cash there, and now we have I don't know what that was. 738. So we raised $500,000 in cash, and our remaining positions lost that much money. So good thing we went to more cash. And it's nothing in particular. The main problem is that the VIX went way up. Where's my VIX? Futures. So the VIX has skyrocketed. We did our portfolios, you know, back here at 14. The VIX is now up around 18. Huge change. So all this stuff, since unfortunately we rely on selling positions, and also our puts got ransacked. They're still all green, almost always. Two are not green. They're still mostly green, but dollar-wise they went down a lot because the VIX changed a lot, and so it drove up the price of the puts. And we want them to be down, of course. And all the things that we shorted, which is, look, short, long, short, long, short, long, short, long. We are mostly short, long, short, long, short, long, short, long, short, long, short. So everything was short, which is the vast majority of our holdings, went against us. Even regardless of its up or down, there's a massive 30% jump in the volatility that has caused the premiums to jump up on all this we sold. So in this portfolio, we vastly have sold a lot of stuff. There's ways to take advantage of that. Of course, obviously sell more things that are highly priced, but it's too early to make a decision like that. So, you know, look, it's not good. It sucks to lose money, obviously. And let's see how much we lost. We lost 1429, and now we're at 1356. So $70,000. We lost $70,000 in a month. Not even a month. Actually 3 weeks. But you know, that's how much we gained the prior month. So all we did is go back to where we were. And the thing is, I'm happy we moved to more cash. And I think a lot of this is temporary. It's not like we got knocked off track with a lot of these things. It's just a matter of because this all just happened the last couple of days. It's just the market turned against us. That's just the nature of these kind of portfolios. So you do get hit pretty hard when the market goes down. And that's why last week I kept saying, you know, I really think we should go to cash. There's not really going to be a better way to protect ourselves than cashing this out. But we decided not to because we think this will be a shallow correction. Even, you know, and again, we were thinking it would be something like this. It was going to happen. But we think it's going to be a shallow correction. We think it's going to steady out after this, and then we'll be back in good shape. And then the premiums will go back to normal, and everything will be hunky-dory. So we're not panicked yet, and of course we have the short-term portfolio, which because this is a narrow, it's only a 5% drop so far. So the short-term portfolio, which was up 600%, is still up 600%. It's not moving because nothing's going to kick in yet. We have the January 8 SQQs, and SQQs only at 9. We have the short TNA. That's going to be in good shape, and that's showing no profit yet, but it should be in good shape. And we have the TZAs, and the TZAs are at $7 calls, and TZAs at 9. So you know there's huge money to be had if we go down another 10%, which will be a 30% bump in this one and a 30% bump in this one. And they're both at 9, so 30% more would be about 12. And 12 times, so $3 more times 600 things is $180,000 that the short-term portfolio will jump if the market drops 10%. And since the market dropped 5% and it cost us $70,000 in the long-term portfolio, it's basically what we can see now is that we're going to be almost even if the market drops another 10%. The hedges are just starting to kick in at a 5% drop. But the hedges aren't designed to protect us from a 5% drop. A 5% drop is just a normal movement. We don't protect ourselves from a normal up and down market. We protect ourselves from a big drop. And a big drop is a 10 to 20% correction. That's what we design our hedges to protect against. They don't do crap against a 5% correction. 5% corrections is something you ride out. Unfortunately, when you have a $1.5 million portfolio, a 5% correction is $75,000. That's the crazy thing about it. That's why I said it's easier to cash out. Because this is what happens when you don't cash out. You leave yourself very vulnerable to market swings. And there's no magic way to get out of that. Not you know, I mean, you're not without radically overhedging. If you're going to overhedge to the point where you lock it all in, then what do you have? You're not going to make any gains. So it becomes pointless. So 2.13 or whatever, it doesn't matter. I mean, point is that we didn't do much. And I said, look, we're clearly benefiting from ridiculous market conditions. I know from experience, no matter how many times I say it, people don't believe how quickly you can get back a big chunk of these profits. I mean, I'm saying this on, when was this, 4:30. So a week ago, this is what I was saying. Exactly what happened. And I said, we've been purging, we have a fear of missing out on more gains, and that's the only reason we're sticking in this thing, but it's stupid. $2 million is a lot of money to risk, and we get to the point where I'd rather cash it out and start over again, locking the 1.4 million profit in a safer place. All right, and I said, not today, but soon. Now, what happened is, of course, because I said not today, but soon, we had such a sudden drop. So I don't know what day that was. Wait, when did this weekend? That's May 6th, May 3rd. So I wrote that the 30th, and the market was here. So here's me on the 30th. We went up and down and up. Finished the week here on Friday, but then we come back on the 6th, and that was that Monday? And Monday, Tuesday, Wednesday, yeah. So that was Monday, and boom. And here we are, and we're still here. We're in the same boom place that we were. So Monday morning, we went boom down, too late to cash out. And I could have gone with my gut, but I mean, it's unfortunate. People don't really want me to cash out. People want to stick with the portfolios. If I cash out, people have all these positions like, well, I guess I got to cash out too, and they don't want to. Taxes, blah, 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 all these reasons. But I'd rather pay tax on my profit than not pay tax and lose my profit. What's the point? Who cares if you have a lower tax rate if you make less money? I mean, I just want to maximize my profit. That's what your focus has to be. Fortunately in the hedge fund, we don't have this problem because we each run like a business. So we have a profit and loss at the end of the year. Also, my accounts are in a trust account that does that also. If you have a lot of money, if you have enough money to worry about taxes, you really should be setting yourself up with a family corporation or something. There's all kinds of ways you can do it to set up a business. Even if you're a full-time trader, you can elect trader status, which is a thing the IRS gives you, lets you run your portfolio like a corporation. But if not, you can set up a family trust or a family office where effectively it's like running a hedge fund, except you're the only client or your family is the only client, depending on how you run it. And again, it lets you run like a hedge fund. So basically, everything that you do is a profit and loss. Plus, it lets you expense stuff. Like it lets you expense your PSW membership. It lets you expense. And by the way, check with your advisors. I'm not an accountant. I'm just telling you what I heard. So it lets you expense educational expenses. It lets you expense travel. It lets you expense research. If you subscribe to stuff, it lets you expense that. It's good. That's so all that gets taken off against your stuff. If you're running your portfolio is like a business. So it's something to really consider. And then you don't have to worry about wash rules. You don't have to worry about short, long-term gains, all that bullshit. It's all the same. So did you or did you not make money selling your stocks? That's the only thing that matters. And then you have a P&L at the end of the year. And then you can do all kinds of accounting tricks after that too. So where were we? Portfolios, right? Okay, so while we're looking at portfolios, so the short-term portfolio is doing nothing at the moment. We did add something to the short-term portfolio, but I forgot what it was. But it should be in there. It isn't yet. Then we've got the butterfly portfolio. 69%, I think, is actually up from where it was. That's interesting. 165, it was 65.9. It's amazing. This portfolio is so cool. Just go ahead and make some more money. So doesn't care. Butterfly portfolio does not care what the market's doing. It just keeps making money. And that's because we're betting both ends. So even though the market dipped, some was in our favor, some was not in our favor. It worked out. We didn't even touch this portfolio, actually. And what else do we have? Then we have the Money Talk portfolio will be interesting. We certainly haven't touched that. That's a 147. And what was Money Talk? TALK. Money Talk was a little less. What? Oh, no, wait. What? Wow. Oh, 147%, not 147,000. Okay, that's like I got confused there. Like, how could it possibly have gained? Because I know what the positions are. There's not that many positions. I know it should have lost some money. So it's at 123 now, and it was at 127. So the Money Talk portfolio is very well balanced. It was at 127, now it's at 123. So nothing to complain about there. Just a tiny correction in that portfolio. And then the options opportunity portfolio is probably not hedged enough. 180%. Well, 180 is not bad. And where were we? And the OOP was at 200. So it dropped 20% the OOP. All right, so for whatever reason, but I think we have more cash. I think we also raised cash in the OOP. We have 127 cash now, and we had 64. So again, in both cases, we raised a significant amount of cash in our position, and we're ready for a sell-off. If there is a bigger sell-off, we're ready for it because obviously we have cash to spend to buy more things. But, and again, it's the VIX. The VIX is causing most of the problem. So it's not so much the positions are bad, but now that's the thing. The Butterfly portfolio isn't like the other portfolios. It's not running the same kind of, it sells premium, but also we own premium on the other side because we buy the buffer positions. It's set up a little differently. So it doesn't, it's not that concentrated on selling premium as the options opportunity portfolio and the long-term portfolio are. Money Talk is just really well balanced, but of course it's really well balanced because I can only touch it once a quarter. So if I can only touch it once a quarter, I have to keep it well balanced. And I thought that we were going to have a sell-off, so we made some serious moves. Where is Money Talk? Where are you? Money Talk. So look at the moves we made. We bought back the covers on the NASDAQ Ultra Shorts because I wanted to be able to be a bit more flexible there and make more money was important. Wow, we didn't change anything else? That's crazy. I guess it was the last time we did some moves. We made no changes. We made just that one little change. We uncovered the SQQ short calls, and then we added the BNS play, and we added the UNG play. That's it. And how are those guys doing? Let's see. Here's UNG losing money so far, so good for a new trade. And the BNS trade. Dun 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 dun. Wait. What? Was it BNS? Am I wrong about what it was? BNS, did I put it in the wrong portfolio? I swear I did it. Oh well, we'll never know. It's not there. How weird. I swear I put it in there. Oh man, I remember doing it. I must have put it in the wrong portfolio. Is it in the OOP? That is the OOP, that's why. That explains it. There it is. Okay, so the BNS play is actually doing okay. Made $1,000 or $900, and UNG. Oh, and UNG is up too. Both those trades are making money already. So good. Okay, well that helped. Obviously, that made $1,600 difference right there. Those two trades, and everything else was pretty good. Barrick. They're down today, but honestly, they had pretty good earnings. So I think I was happy with their report. In fact, I highlighted it in member chat. Let's get back to today's stuff. Home fill. But anyway, so that's what I mean when I say you can't, I'd rather cash out because you get to a point when you've made so much money, you can't really protect yourself adequately. And you're better off just going back and starting again. You know, you can, and I'm not saying don't play the 1.4 million. It's like we had $2 million. We started with 600,000. 1.4 million in profit in 18 months is a lot of money. You take, especially when you start with 600,000, and you take the 1.4 million and you put it into nice, Ford, Ford into GM, into AT&T, you put it into nice safe spreads that'll make 20%. You don't give a shit whether the market goes up, down, or sideways. Like we just added an AT&T trade to the options opportunity portfolio and the long-term portfolio. We don't care what the market does. It's nice, safe money. It's going to make 20, 30, 40% a year just in a very simple spread and a very well protected spread that minimizes our need to hedge against it too. So it doesn't require the hedging. It's going to make you some nice money. It's going to pay a nice dividend. That's what you do with cash. When I say go to cash, I mean go to like nice safe positions with the cash, not necessarily go to all cash. And especially if you have a margin account, portfolio margin account, because positions like that use like no margin at all. So you still have your cash sitting around and a ton of buying power and these positions. Because there's nothing really very dangerous about having AT&T in your portfolio, and then you cover it, and if you cover it with long calls, your margin on the short calls becomes very minimal because the long calls are taken into account. I'm sorry, short puts, and you can't lose on long puts and the long calls. Sorry, short calls. You can't lose on the short calls and the short puts at the same time. So therefore, the margin requirement becomes very, very, very low, and probably less than 10% of the position. So, and the cash is an asset, obviously, so you don't get charged much for that. The equity is an asset, so you don't get charged very much for that. So it's a very, very cheap position to hold from a margin perspective in a portfolio margin account, and you're going to make a ton of money off it. So in other words, what I'm proposing when I say let's cash out, I'm saying you take the $1.4 million, put it into things that are going to make more than 20% a year. So 2 years from now, it's going to be another 500,000. You'll be at 2 million. You'll have 2 million. And it doesn't, and then so theoretically, it really doesn't matter what you do with the 600,000 you have left. Even if you lose it, you'll still have 2 million in 2 years. That really takes the pressure off, doesn't it? Then you can, and then you can even play more aggressively with the second round league. God, you got $600,000. Doesn't matter if you lose it or not. You're going to get now. You're collecting $250,000 a year just from the money you put aside, and that's again, it's $250,000 against your original 600,000. That's good money. That's got to be good money. You're getting a 50% return off your original investment, just from boring old dividend paying stocks. That's how you set up a portfolio. You can't always expose it and always keep gambling it, because if you always gamble it, one day something bad is going to happen. And again, what's happening now is not something bad, but my worry is that this China thing completely blows up, and in the next couple of days, we're going to have like 1,000-point drop, which is fine. We're hedged for a 1,000-point drop, but that's when I'm going to say, gee, I think maybe we want to cash out now. We might want to then cash out. And if we do cash out, then we'll probably be about even where we are now, but we'll have taken 100,000, maybe even a $200,000 hit, maybe a 10% hit off our $2 million. So the gambling on keeping the $2 million in play can end up costing us 10% of our money, just trying to keep things going. And then that's where that's where my concerns were last week when we were doing the portfolio review, and they still are, same concerns. Up, Ken came and left. Said the audio went out. I don't know if anybody else had that. Excuse me, if anyone else had that problem. But of course, if you have that problem, you wouldn't hear me saying that. Thanks to the silver alert on Thursday, I added to my SIN 9 and looking to get out above 15. So that's Dan said that. Silver is a good one. I always love silver when it gets cheap. And how did silver do? Well, it was 15. So you kind of missed out there. But yeah, we liked it off 1480. I certainly loved it at 1460 when we were talking about it last webinar. But 1480, if you played off 1480, I can see we might want to hold out. Just be careful if you have trouble at 1490. It's good money. So I mean, it's that's not bad, and you can get back in over 1490. But if you get rejected at 1490, I might want to take that off the table, not just keep playing. And it's not like you don't get another chance. You get a chance and chance and chance and chance. It's just constant. If we look at daily, here you are at that line. That's been a month. Before that, we were in this range. And again, the dream is that you're holding it and this happens, and you make a ton of money. It was like $5,000 or something like that for that. You always want to do that, but honestly, much more often than not, I have made $500 10 times before the people who are holding on make 5,000. In other words, like here's somebody waiting for their big move, right? And somebody here at 14, very valid. They think it's going to go to 15, and they hold it and hold it and hold it. But meanwhile, I get in and I get out, and I get in and I get out, and I get in and I get out, and I get in, I get out, I get in, and I get out. And by the time we're here, I've already made my $5,000. So, and then maybe I luck out here as well and get in, and I happen to be in when it pops over. But it doesn't matter. It's like because here's the thing. Here I make my 5,002, and here I make my 5,002, and here I make my 5,002, even though it's going down. So I'm going to make my 5,000 by making a couple of $100 or $200 to $500 over and over and over and over again, because there is a channel. And you can see that, because look, it doesn't look like much of a channel, but when you zoom in, it's like, wow, I can play that. I can play every time I find a base at a 10 around here, I pick it up, I get out with a dime, I wait for it to come down, it doesn't come down, I get back into the next break, I get out with a dime, I wait, or pick it up at a cross again, or whatever. You stop out here, it comes back under, you play it again, it fails, you play it again, it fails, you play it again, it fails, then it goes back down nicely. Didn't come down all the way to the dime point, but maybe you play, maybe you don't, whatever. And here, or even if you wait for this cross, you play it winner, comes back down, play it big winner, not much of a stop out there, comes back down to the line, play it again for a winner, comes back down to the line, play it again for the winner. That's just a zoom of this from here to here. And you can see there's like 300, 500, 250, whatever, constantly. So, don't get caught up waiting for these giant runs. It ties up your money, and there's no point. And that's exactly why today, even though I have extreme faith in my gasoline position, I believe it's going higher than where I got out. I think it's going to go up. I think it's going to go to 2 and 205 and 210. But I also think it could come down. So if it comes back down to 195, I'll be happy. I'll get back in. On natural gas, same thing. That's a big move for one day. I feel like an idiot not taking that off the table. That's a big move. We're back near the top of the range. It's got just as good a chance of going down as up from here. And maybe I can play it again from the bottom of the range. I don't know. I don't need to be in it anymore. I made good money. Coffee, obviously, I think coffee is going to go miles higher than it is now. But I have, well, I'm sorry, I left that one. That's the one I left because coffee is still so low in the range that I would still play it even down here. If it was here, I'd still play it brand new. Coffee's nowhere. I think coffee can go up big, and coffee's a nice contract mover too. But you have to when you make really good money, you got to see it and take it off the table, just like we did with $500,000 worth of our gains in the long-term portfolio in the review. And really, it's like you gotta, that's what the reviews are there for. The reviews are there to help you learn how to do this stuff. And just go to the reviews and look at what we said, and not just here. We're going back months and months, but what did we say and what did we do? And I said, I wish I could cash everything out, but we're not going to cash everything out, but I'm going to look to take money off the table. And so I said, I'm going to look for things to take off the table. And lo and behold, and we talked about this, I think, last week in the webinar. And lo and behold, I found $500,000 worth of things to cash out in the long-term portfolio. Now, obviously, a big chunk of that was this Apple spread. So we took 300,000 off the table there, but I found another couple of 100,000 besides that to take off the table. And it made me feel like way better. We only had a couple of $100,000 sitting in cash. I didn't like that at all, considering I'm worried about the market. But now we have, $750,000 worth of cash, and that's like half of our portfolio. So even if everything else tanks, I know I got $750,000 to go shopping with. And then if we recover from that, we're going to double up again, and we'll be right back where we started. Well, not where we started. We'll be right back to the highs of the portfolio. Hopefully, we won't lose all of the money that we have tied up in stock, and we'll be able to recover, and we'll also start adding the 750 back in. But when you have a portfolio and you have more than half, when you've used more than half your cash, you better be freaking bullish on the market. When you have half your cash deployed already, and now you're deploying more, you've got to be really gung-ho bullish, because you're telling me that all your positions that are out there now and the positions that you're buying brand new are going up from here. That's pretty freaking bullish. And I'm not that bullish. And I said that last week. You got to go with your gut. At a certain point, you got to trust your instincts. Especially when you've been trading as long as I have, you've got to go with your instincts. And my instincts told me, I don't give a shit how much they tell you China is great. I don't care how much they tell you everything is great. It feels wrong. It just feels wrong to me. Things are not as great as they say they are. And you don't know what's going to derail things, but they're about to kick Theresa May out of office. There's that issue. We have a war possibly going in Iran. We're ready to deploy troops to Venezuela, where Russia and China will back up the government there. And what the frick is this about? Maduro is a successor to Chavez. Chavez was just as bad as Maduro. And honestly, they're both vilified by the U.S., as is Cuba. It's not like they're such horrible people. First of all, if you consider the fact that the guy we're supporting is a huge outspoken opponent of Maduro, and he's still alive. Okay, so that right there tells you it can't be that bad. The guy's not completely evil. So, there are elections, whether faked or not faked. Nobody participates. That's the problem. Only 10% of Venezuela's population goes to the polls. So that's ridiculous right there. And then you have 5 guys running, and so Maduro stayed in power. He got like 60% of the vote. Now, Who knows if it was fair or not? You know what the weird thing about his election was? That the United Nations and everybody else, not just the UN, but basically everybody refused their invitation, Maduro's invitation, to come and monitor the elections. Because the problem is, I think that the US was determined to call the election a sham, regardless of whether or not it was a sham. And this is Trump, this is all under Trump that's happened. So I think that their strategy was to stop the UN, because the US can do that. We stopped the UN from inspecting, we stopped everybody, most of these rights councils are funded out of the US. And so we stopped everybody from going down there to verify the elections, even though Venezuela asked that we go down there and verify their elections, and then we turn around and call their election a sham. He invited us down. He said, please come monitor our elections. So that's the entire basis for us. Is we're not overthrowing him for war crimes. We're not overthrowing him for doing horrible things. We don't have a lot of evidence that he's done anything bad. Obviously, the economy sucks, but it's hard to say whether we can blame him or not for that. That's a mismanagement of the oil, which is a primary resource. And to some extent you can blame socialism, but their oil company makes a lot of profits. It's just there is a lot of redistribution. They probably don't invest as much in infrastructure as they should, so on and so forth. But it's really about the fact that Chavez wouldn't let American companies come in, and neither will Maduro. And if we're not going to let, in an oil-rich nation like Venezuela, if we're not going to let people come in, well, look what happened to Iraq. Now we have U.S. contractors all over Iraq. We have U.S. oil companies all over Iraq drilling their oil. That's what the war was about. Now we're making billions of dollars in Iraq drilling for oil. Not we. Doesn't help the American people one bit, but it helps the oil companies, and that's what matters in this country. And that's what Venezuela is about too. Venezuela's got oil. And who else has oil? Mexico has oil. And Trump doesn't like them either. And Alaska's got oil, and the Arctic has oil. So Trump is getting rid of the environmental protections, and they're gung-ho supporting our right to drill in the Arctic. Even though it's insane to drill in the Arctic because it's freaking freezing. But if oil gets really expensive, they'll do it. But it's just insane to go up there and do that now. Anyway, so where were we? We added Mittal, we did Micron, we cashed out a bit of that. I got rid of Papa John's, we got rid of Qualcomm, which I guess Qualcomm was here and we got out. It went up a little higher, but I don't regret that. Oh dear. Anyway, Walgreens Boots still down, terrible. Wheaton Precious Metals came back a bit. But anyway, so the portfolios are chugging along just as we expect them to do. And it's silly to review them constantly and worry about where they are, but we'll see what happens. But we're in pretty good shape, I think. I'm not too upset about this. Oh, we didn't look at the EIA report. Let's see if we have any questions first. Dean says on silver, yes, I struggle with whether to hold or take small profits. I can't watch the price around the clock. Yeah, look, when I used to work, I used to just always take my profits off the table. I figure I'll come back next time I have time to sit down, I'll play again. But they go just as fast as they come, unfortunately. So it's and especially when you're in a channel, so you have to really just kind of watch the channel, and we'll look at silver where they are. So, in this case, the channel clearly at $14.95, you're done. I wouldn't take it, I wouldn't take a chance there. Look, I believe it'll go higher, but it doesn't matter if you believe it'll go higher. What realistically has been happening lately? It tops out around $14.95, drops back to the low 1480s, comes back and comes back. So if you have it now, then this is what you want to hope for, is $14.95, but I wouldn't push it past there. You know, but again, there's nothing that stops this from happening. You know, we were here and then we went down like a rock over there. And if you can't do this, you shouldn't even be leaving it on overnight. Because it can drop just as fast as it goes up. You know, it's if you make it, you know, so if you get in, you make some nice money and you can't watch it, it's tough to leave it. It really is, because it can really go against you very quickly. All right, so petroleum status report. Goodness, why am I tired? Petroleum. All right, so we know we had a better report here than the EI. Let's make sure this is today, ended May 3rd. Good. Okay. So oil imports average very low. Oil imports average 6.7 million barrels a day, down. Well, it says down 721 per day. Let that sink in. Oil imports were down 700,000 barrels a day. And how many of these are in a week? 721, 1, 2, 3 times 7 days, 5 million less barrels were shipped to the United States. I'm saying this really slowly. I want it to sink in. This is why you have to read the reports and not just fall for the bullshit, because you could watch CNBC and Bloomberg all day and all night, and not one freaking analyst actually reads these reports. It's a joke. They tell you what they want to tell you, or they tell you the lazy headline that everybody reads, and nobody actually reads the report, which means they have no freaking idea what's actually going on. And that's why when you see these trades go off and you see the oil go this way and that way, and you say, oh, I'm not sure if that makes sense. It doesn't make sense, because it's being traded by people who have as much information as a person betting on a roulette wheel. When you know, on the roulette wheel, they have that thing, and you visual aids. ROULETT, roulette. No, roulette. Table, something, images. Come on. Oh, seriously? Anyway, they got these things at roulette tables. Really? All right, I'll assume people know what I'm talking about. Roulette table, Vegas. Oh, not Vegas, Vegas. Yeah, that thing. See this? It's hard to see. You see that thing there? What that does is it's a thing that tells you what the last bunch of spins were. There, see this? This. So on the table, they tell you what numbers came up. Well, that's weird. That's why somebody took a picture of this. It's kind of weird, right? 19, like every time. And it goes on in 20. Wow. That's a broken wheel somehow. And they're not even together, like 19 and 20 aren't even together. I can't see them here, but they're not even like, you know, the numbers are on a roulette wheel are kind of randomly distributed. There's 19 is over here, and God knows where 20 is, but it isn't next to 19. So that's just weird. That's just, you understand what? But there you go. So, in other words, given this information, people think that there's one there. See, people think they're being smarter, so they say, "Oh, look how many times it came up 19, so I'm going to bet on 19." Now, oddly enough, it would have worked for somebody who came in over here. Or they say, "Look how many times it came up red. I'm going to bet black because it can't possibly come up red every single time." You know, that's the amount of information people have to make bets on roulette, and you know it's foolish. Like deep in your gut, you know that's a stupid way to make bets. Meanwhile, oil traders trading billions of dollars worth of oil traded off just the freaking headline number and don't read the report. Well, first of all, this report isn't even out until 1 p.m. So all the trading that goes on, but from 10:30 to 1 p.m. is based on very limited information, even if people were going to be bothered to read it. It doesn't exist. You can't read it. So to believe that there was a good demand for oil when we imported 5 million less barrels and still had a build. No, I'm sorry. We had a draw in oil of 4 million barrels. So they shipped 5 million less barrels, yet we had a decrease in supply of oil of just 4 million barrels. So that still means we're building, but we've cut back our shipping. We've cut back the imports. And it doesn't reflect here. It's hard to decide. I'm not sure whether you even get that number because it doesn't reflect here. But they're saying that crude oil imports average 6.7 million barrels per day. And this says net imports. It's really weird, huh? And that doesn't say anything like 6.7, but we'll take their word for it. And so they're shorting us by 5 million barrels for the week, basically. Over the past 4 weeks, imports average about 6.8 million barrels a day, 15.7 less than the same 15.6% less than the same period last year. So drastically less imports. Gasoline imports average 1.4, distillates average blah, blah, blah. So, and then net, obviously, we're still exporting unbelievable amounts of oil. We're exporting 2.7 million barrels a day. So 2.7 times 7. We're importing 19 million barrels of petroleum products out of the country. So we're taking in 5 million less, and we're exporting 19 million barrels. 19 million barrels of product supply per day. An entire day's supply, and that's 1/7 is 14%. 1 divided by 7, 14%. So 1/7 is 14%. So we're exporting 14% of the oil that we produce out of the country, and we're importing 5 million barrels less than we did last week, and we only have a draw of 4 million barrels. So it's a terrible number. There's nothing supporting here at all of U.S. oil. Gasoline inventories down. Okay, and also you got to watch other oils. We always look for that. So what you want to just get a general idea of what's going on. So the inputs to refineries about the same. Refinery utilization is down 2%. That's a big deal too. That's 2% of 20 million. So that's 400,000 a day less refinery utilization. So that means we're producing 2.8 million, obviously, 2.8 million barrels less out of the refineries. Gasoline production has obviously, look at that. That's well, from last year, it's down significantly. And distillate fuel production is flat. And then we have crude oil Crude oil has a draw, motor gasoline is flat, distillate's flat, other oils has a build. This is where they always screw you, right? They don't report other oils, and other oils are up 3 million barrels. So not only did we only have a 4 million barrel draw in oil after importing 5 million barrels less, but 3 million more went into other oils. It was processed into an uncategorized thing so that it wouldn't show up in the reports. They do that all the time. They mess with it. The SPR actually went down a bit. Went down by like 1 million barrels because somebody sold some oil, did something. So basically, it's all bullshit. It's the bottom line. Meanwhile, product supply, gasoline, same. No big changes in product supply. Prices Now, last year they were quite a bit higher. They were $70 last year. Now they're $62. Gasoline was $2.07 last year. Now it's $1.97. So big changes in prices and all that. But this is reflecting what's true is there's really less demand now than there was last year. They are building up. We have too much oil. We have so much oil. We have so much oil that even when we ship it out, 20 million barrels a week, when we ship out 20 million barrels, even then, we still have too much oil. And then we have to import less. And we're cutting and cutting and cutting our imports. Now we're making more at home. This doesn't really list that, but apparently we're making like 12 million barrels. Obviously, if we're only importing 6.7 million, and we're refining 20 million a day, there must be 13.3 million somewhere, right? So we're actually making 13.3 million barrels. We're only importing 6.6. So we're making like 13 million barrels of oil. That's pretty freaking impressive. But long term, I think the thing is like, how long is that going to last? And I don't think it's going to last. I don't think it's going to last forever. I think that we're not capable of producing at this level for a very long time. I think we just keep tapping and tapping and tapping. All the oil that's left is being tapped constantly, and we're just shoving it out. Now we're building pipelines to shove it out, and I think we're going to just suck it all dry, with these wells, we're going to start fading out, and then we're going to run out of new places to drill. Because there's maps. What would you call it? Oil reserves by country. Let's see if we can get a good map on that. There you go. That's a map. Well, it's better if you have a map that shows the big bubbles. How about that one? Okay, can we get a bigger picture? Big picture. There you go. Okay. Wait a minute. Oil consumption. Oh, how about read the chart before you start enlarging it? Oil consumption, consumption reserves. All right, well, no, it's gas. Damn it. Why is it so hard? I said reserves, didn't I? All reserves by country. Biggest reserves by country. It should not be difficult. All right, let's see what that is. Okay, oil reserves. All right, forget production. All right, oil reserves. So America has 30 billion barrels. The Saudis have 264 billion barrels. This is the important part. 30 billion barrels as of 2010. So it's certainly lower than that now, I imagine. So if we're using 13 million barrels a day times 365 days, we're using 4.5 billion barrels a day. Not a day, a year. I'm sorry, a year. So 15% of this oil, and this is from 5 years ago, 15% is being used every year. That means we only got like 5 years worth of oil. And it doesn't, it's not smooth, because what happens is it's easier to tap the wells when they're more or less full. As they start drying out, you get less and less production out of each well, and it slows down the process. So, we're pulling oil at the same pace as the Saudis are, at 13 million barrels a day. We're pulling at the same pace the Russians are at 77 million barrels. This is all being encouraged by the Republicans, drill baby drill, right? So what is going on here? We are going to make it so we have nothing left, and we are 100% dependent on foreign oil. It's a stupid plan. The plan that they have, I would have done the opposite. I would have said, don't touch our oil. Our oil is for emergencies, like if people cut us off or something. That's what our oil is for. All U.S. oil is on standby and not to be touched. And I don't give a shit what happens to the oil companies. I'm like, go somewhere else and get your oil. Don't get it here. Because, and yes, American oil prices would go up, and we'd end up paying what they pay in Europe, which is like $6, $7 a gallon. Tough. Let's use all the rest of the world's oil, and let's buy all the oil from the rest of the world, and not use our very precious, very small amount of oil. Because what's going on is the pace we're running it now, we're going to be completely out of oil and completely at everybody else's mercy in less than 10 years. This is a stupid plan. It was a stupid plan when they started saying drill baby drill, which was McCain and the McCain campaign. That was eight years ago. I mean, 8 years before Trump. When he was running against Obama. It was drill baby drill. And we are drill baby drilling, and we are sucking up every last drop of oil out of this country and selling it at fairly low prices, all for, and it's a story of America, right? It's all about short-term gains. It's about winning, quote, winning in the short run, and who the frick cares about the long run? I mean, that's the problem. Climate change. Did you guys? I just read we're wiping out like 1 million species. Not the U.S. personally, but mankind. We are putting 1 million species into extinction in the very near future, like within not even, I think, in 50 years, and that's most of them. We are causing the next mass extinction on the planet Earth. There have been several. The asteroid that wiped out the dinosaurs was a mass extinction event. Human beings in history, when you look back at history, they'll say there was this asteroid hit the Earth and something else happened. The Ice Age was a mass extinction event, and human beings. Because the Ice Age lasted millions of years, and the asteroid did. The asteroid hit the Earth and wiped out people things right away. But the Ice Age lasted millions of years. That was a mass extinction event. Human beings, in only, we've been around for a while, but really a couple of 100,000 years of actual activity on the planet. In less than 500,000, not 500,000, in less than 250,000 years, we will have caused the next mass extinction on the planet Earth. We will have wiped out most of the life on this planet. It's an amazing thing. And when you have a mass extinction event, the dominant predators on the planet tend to die, which is us. they don't survive the loss of all their food. So we are such idiots. We really are. It's amazing. I mean, I'm embarrassed. I tell my daughter calls me up from college and she asks me these questions. She's like, "What the hell are we doing?" And I'm like, "I'm sorry. I wish I could do something about it. I can't." We have an administration right now that's actively firing people who bring up climate change and scientists. Like they won't. If you work for the Trump administration and you write a report on climate change, they fire you. Doesn't exist. They don't want to hear about it. We just stopped the UN from doing something about climate change in the Arctic Circle. Craziness. What was that thing? It just saw something interesting. Where did I see that? Oh, this. What's this? World. Oh, here you go. This is why we're so concerned about Venezuela. Ooh, way to go. There. Look, see why Venezuela is such a big deal? World's largest proven oil reserves. Venezuela, 300 billion barrels, more than Saudi Arabia. So we must stop Maduro. This is why we must stop Maduro. 300 billion barrels of oil he's not letting us play with. So we must stop him. He's a bad man. We must get him out of office and put in a puppet. I'm telling you, I'm ashamed. I talk to my daughters and I am ashamed. They ask me questions now. You know, they ask me college level questions from their liberal colleges and say, why are we destroying the environment? I mean, they ask me, they know I give them the economic big picture things and whatever, but push comes to shove, I'm like, because we're freaking idiots. We're like little children. We are destroying the planet. We are raping the resources. We're making terrible, terrible decisions for these incredibly short-term pleasures that are ultimately going to cost us the entire planet. You know, we're probably going to go extinct because of what we're doing now, and it's something we could stop doing if we wanted to, but we have no will to do it. We don't want to give up our stuff. We don't want to pay too much for oil. We don't want to stop eating certain food. We don't want to eat less meat. We don't want to not drive our own cars. We don't want to take public transportation. These are too inconvenient for us to bother surviving as a species. It's really messed up. And our government, as I said with this oil thing, our government is making those same decisions. It's like, no, we want to use the last 30 billion barrels of oil we have in America before tapping the rest of the world's trillion plus barrels. They're willing to use it and sell it to us while we keep our 30 billion barrels, but no, we don't want to do that. We're going to use our 30 billion barrels so that our little oil companies can make a few billion more dollars before the world ends. It's annoying. It really is. It's hard to, I'm embarrassed. When I talk to my children, I'm embarrassed. I tell them, I'm like, I wish I could do more. All I can do is bitch about it to people. I tried for years to do something. I used to run down to Washington and lobby for things, and I used to work for people and write speeches and do all sorts of stuff. Nothing helps. So far, nothing helps. You know what helps? Giving millions of dollars to politicians and getting them elected, and then they do everything you say. So I should have gone that way. I should have gotten richer. I should have gotten richer sooner, and donated more money, and put puppets in power. You know, and again, that's the problem. That's again something I consider wrong, but that's the only way to get things done apparently. And that way, even if you want to kill the planet, they'll do it. They don't care. If your goal is to destroy all life on Earth, there's plenty of people who will take your money, stand up there in Congress and vote for it. No problem. They have no qualms. Anyway, all right, let's see if we can find something happy to talk about. Get me off on a tangent there. Wow, look at that. Going up and all right, well, I'm out of that one, so tough luck. I stuck with that one. It's going nowhere. I'm out of that one. All right, well, what can you do? There's nothing good to bet, unfortunately, because by the time we got to the webinar, it's already hit our numbers. But you guys, just check in on the mornings and watch what, if there's something on the post, I write about it. If there's something in chat, we'll talk about it in the chat room. But I look for levels. I look for, 25.8 would have been good this morning, but I look for levels that have been holding. I watch for them to see if they hold again, and I use them as a stop. Not complicated. You're looking for 28.50. We didn't quite get there here. 7,600 is where we went long the other day on the NASDAQ, and we hit it again there. And that's the other thing, by the way. I don't. If I said 7,600 yesterday and we get back to 7,600 today, it's still good. You know, it's not like it changed. If you're not sure, ask me. But generally, yeah, of course. If it was a good stop line yesterday, it's a good stop line today. So what we said about Apple came down a bit. But these are all just minor corrections. Nothing's a very big deal. So I'm not too worried about the market at all. See if there's any news going on with Seeking Alpha. News. There it is. News. Market news live feed. Oh, there you go. Chesapeake caught on. So they had earnings. They took them badly early this morning, but they're coming back. Because I didn't think they were that bad. So this morning we went down like all the way down here at the open to 269, but now we're back up. So, but it's where we thought it would be. Now Chesapeake position is not in that portfolio. What is this? Money Talk. In the long-term portfolio, I think we got aggressive on them. Oh yeah, we got aggressive on them. We bought back the short calls, so we only have the longs, the long $2 calls. And we're expecting them to come up nicely, and today's earnings report seemed like a good deal. They're moving from Marcellus to do more of the whatever you call this thing, the Powder River, whatever it's called. Ad revenue slip at Nexstar, some data, Google Music, subscribers stall, who cares? Although Google, they are spending a lot of money on things that don't tend to work. Chanticleer Holdings stores, they announced a new partnership with Beyond Meat. Beyond Meat will be offered at 50. Little Burger, never heard of these. Don't know who these people are, but apparently now all you have to do is work with Beyond Burger and your stock goes up. American Express has a dividend, we know about that. Dean Food, Madison Square Garden disappoints. That's because the Knicks totally suck. I don't know, they're in Brooklyn now anyway. I don't know who they're. Who plays in the Garden? Just the Rangers. Well, that's useless. Wait a minute. No, the Knicks still play in the Garden. Yeah, they suck, so that's a problem. I wonder how bad they got hit. And then they own the networks. This is the problem with these sports guys. This is the problem with these companies. They buy their own networks. Like, so MSG has the MSG network, so they broadcast, but then you've got all your eggs in the basket of the team. And if the team has a bad year, or if they just generally suck, your whole thing, your whole operation falls apart. This is not a big correction for them at all, though. I mean, look at that. Look at this thing. They were 150, 166. They're up 300 here. And I guarantee you this doesn't justify. MSG. Obviously not Morgan Stanley. Really? I don't know why it does that. So MSG Network. So where are we? So, well, they weren't making any money here. So 1.3 billion, now they're doing 1.7 billion. So that's actually pretty good growth. They're not now. I mean, they're moving towards 1.7 billion. They strangely made profit here. They probably sold something. 12 billion here, 35 billion, 60 billion, 60 million. Sorry, this is not a big company. They're being valued at 7.2 billion, so about 20 times this year's projected earnings. You know, I mean, they're about probably closer to the right price here. So they've grown into their valuation, but there's certainly no way I'd go long on this thing. Now, I'm still just surprised they're up this high. Since, I mean, to me, it's like they got lots of problems. Brandon says, you mentioned a death cross on the Russell. Is that something to be concerned? As you mentioned, you saw the same SPX in November. Well, it matters a lot more if it happens on the SPX than if it happens on the Russell, but let's take a look at the Russell. Oh, no, sorry. Now, for those of you who don't know, a death cross is when the 200-day moving average crosses below the 50-day moving average. So, the problem with the Russell right now is they can't avoid a death cross, because if, you know, and this is why, by the way, the most important thing about a chart, most people read charts backwards, which is idiotic. It's like you have to understand how charts work. And the way a chart works is not complicated. The 50-day moving average is 1/4 of the 200-day moving average. Therefore, a move up here is going to affect the 50-day moving average 4 times more than it will affect the 200-day moving average. A move down will affect the 50-day moving average 4 times more than the 200-day moving average, right? Not complicated. There's no, you know, it's like you don't have to be like a mathematical genius. You don't have to know, you don't have to understand charting mystique or anything like that. That's what these lines represent, the average of the last 50 days, the average of the last 200 days. So what happens if this stays flat? If this stays flat, the 50-day moving average will move towards to fill in this gap, and the 200-day will move towards filling the gap, but the 50-day will move up faster, and you have a death cross where the red line goes below the blue line. What happens if it goes up? If it goes up, the blue line will move up faster, and the red line will still take too long to move up, and the blue line will go below, and the red line will go below the blue line because the blue line's rising. This is not good. What happens if this goes down? Well, if this goes down, the blue line will go down, but the red line will still cross below it, because it won't allow, I mean, this would have to drastically drop, but unless it's drastically dropped so much that the blue line is curved down, and there you would have to probably figure it out. But if you want the blue line to go down from 1571 to 1570, let's say, you basically have to have a 50-point drop in the Russell, and that's incredibly unlikely. 50 points would be obviously a very large move, like a 3% move in one day. So unless the Russell drops 3% in one day, which would be so fast that it would pull the blue line down faster than the red line could catch up to it, because the red line would only move 1/200th of 50, which would be a 1/4 point, while the blue line would move down 1 point. So the only way that the red line, the 200-day moving average, won't cross below the blue line is if the Russell completely collapses. Other than that, you're going to have a death cross, which predicts the Russell will completely collapse. So, so basically, the Russell is almost a shoo-in to have a pretty good-sized correction. The death cross isn't 100% thing, but it's a very bad sign. Here you go. In fact, watch what happened here. We had a death cross here, and all of a sudden, we had some serious weakness. The 50-day became some strong resistance from the downside, and we fell and fell and fell and fell. So that's what happens. You have a propensity for weakness. Once you have a death cross, it becomes much, everything's going to lean towards the weak side. Now, fortunately, so far, the Russell's the only index where this is happening. But you want to watch, if I could spell, NY, I can spell, I can't type, that's the problem. If when you think of the Russell, it's a broad index, so you want to look at the NYSE, which is a broad index, and then you see how the other cross is what they call a golden cross. I would call it a life cross, because opposite. But when you have a golden cross, and the opposite thing happens, and now these lines have a propensity to send you higher. Now, luckily, so far, you don't have the same problem in the NYSE that you have in the Russell. So the Russell is by itself. But if the Russell gets pulled down and the NYSE gets pulled down to follow it, you've got a really big problem, because any move below the 50 is going to do what? It's going to raise it while it's in this zone. It's going to still be raising the 200 while the 50 gets pulled lower. And so anything under the 200-day, the 50-day moving average, which is 12.8, let's say. So anything under 12.8 on the NYSE is very bad. And if it goes below there, anything down is bad. Anything down is going to move the 50-day lower, and eventually it's going to cross. But it's going to take a long time. This is a whole month. So unless we have a drastic sell-off, and how high is this? This is 13.1. So 300 points down will be 12.5, which is the 200-day moving average. And then you figure out 300 points is 300 divided by 12.8. So 2.5%. Haha, that's interesting. So basically, unless we have another 2.5% drop in the NYSE, it's not going to be drastic, and we're going to have this kind of action moving down. But that means that you better sell by the end of May, because we're going to have some major problems. But we'll see that coming a mile away, so I'm not worried about that. And the NYSE is not generally subject to big moves like that. Although it did make them. Here's the 300-point move right here once. Here's a 300-point move like that. So let's not say it's not subject to it. It made one last month. It made one the month before. It made a more than 300-point move up here. It made a, Jesus Christ, I mean, it made a 700-point move down here. So two 300s made a 300. I'm sorry, it makes a 300 move for. It makes a 300-point move every month. So it's already made one. It's already made one in the beginning of this month. It could easily make another one in the next few weeks. So if we get another 300 points down in the NYSE, then I would strongly suggest getting the hell out of the market. Because you're then heading for a major disaster, because the Russell will be in a death cross, the NYSE will be in a death cross, and the other indexes will probably start following also. And if everybody's death crossing, run. And that's exactly why we did really well in November, because we hedged the crap out of that, because we saw those death crosses coming. So they were a very, very good indicator that told us to watch out. And again, the Russell is only the first one below. It can't really pull it out, but as long as it stays above where it's crossing, it could eventually repair itself. But once the NYSE follows, then you're screwed, because that's the Russell. The Russell is 2,000 small cap stocks. The NYSE is everything else. Is the other 3,500 stocks. So you don't want to mess around with that. And that's what we're going to be really concerned about. So back to some news in case anything's happening. Page down. Comcast, Wendy's rallies. Wow, we used to play Wendy's. That's a shame. What have they been doing? We played them at some ridiculously low price a couple of years ago. Look at them go. Wow. Very nice. Should have stuck with it. Moody's likely to downgrade Occidental if it wins. Yeah, of course, it's a ridiculous price they're paying for them. MDU, Callaway. Oh, and plus there's a breakup fee. Oxy has to pay a breakup fee now to whoever the hell, Chevron. It's so strange. Lending Club. Look at Lending Club up 16%. Such a disgusting little business. I can't believe it's even doing well. MoneyGram didn't do well. Wow, Jesus. Diamondback, Tesla closes their capital raise. 2.7. It went up from 2.4 to 2.7 now. Underwriters exercise their options. Yeah. Wow. Well, they got lots of cash. Vonage is still doing good, huh? Here's one I never look at. China defaults on pace. This is scary. China's $13 trillion bond market. Companies defaulted on nothing. I mean, it's $13 trillion market. But it's accelerating more than 3 times of the same last year. Banks are extending, and so the government obviously is interfering and so on and so forth. So that's a little crazy, and we gotta keep an eye on that, see if it gets worse. Semis weather trade tension and microchip warning. What kind of microchip warning? I don't get these microchip people. So it's somewhere. Huh. The stocks are up, continuing trade tensions. Microchip called for a semi-cycle bottom in the March quarter, but the inline guidance adds to Intel / forecast prior warnings, suggesting the sector won't cover in the second half. I don't know. They'll recover at some point. I'm not too worried about those guys. Nothing interesting there. It's not very interesting. Sorry, nothing good going on right now. Siemens, who cares? Sinclair, who cares? And now we're back to where I was before. 3 Mile Island. Oh, 3 Mile Island shutting down. That's interesting. Well, that's going to be interesting. Where are they going to get their electricity from then? I mean, I don't understand why we're not like spending a fortune like building solar power projects and wind power projects. It's crazy. It's like it's such an obvious thing to do, and we're not doing it. All right, so nothing. There's really nothing exciting going on here. There's no big deal, and it's all hinging on the trade stuff. So we'll have to find out what happens tomorrow. There's not going to be any great way to tell. All right, things will be what it'll be. So I'm sorry we don't have anything better to play, but that's just where we are at the moment. So any last questions? Nope, Death Cross on Rut's the last question. All right, guys, thank you very much for attending, and we will do it again next week. All right, take care, everybody.